Hey Gina, it's Jesse Gibbs. Wanted to make this video to accompany the estimate I'm sending over for your upcoming purchase. At this time, I'm just going to offer one option. We'll come back to that at the end after I walk through it. But let's start here at the top left. See some basic information, your name. We're looking in the Lake Claire area for a condo that will be our primary home. You listed a 280 sales price on your application, so that's what I used for this estimate with a 5% down payment. That gives us about $14,000 needed for the down payment. Offer a 3.5% interest rate on a 30-year fixed. This is accompanied with a 1% origination charge. Scrolling on down under loan costs on the left-hand side, we see the origination charge that's associated with the rate and the bank's flat $9.95 administration fee. These are the only fees that the bank will collect directly. Box B here are third-party fees we're going to pay out throughout the process, including your credit report, appraisal, and then we have to get condo questionnaire documents, so that's an additional fee. That's paid out. I'm actually going to try and overstate that. It's generally less than 400, but I like to work off our worst case scenario there. The attorney's fees are estimates based on the transaction. You'll indicate what attorney you're going to close with on the sales contract, and I will get the finalized fees from them. So I don't have any influence over these. Again, they're just estimates. Government and state fees, again, fees I don't have any influence over, but they will be based on the transaction, and we would finalize these fees with the closing attorney. Now I've just got an estimated closing date, 30 days from today. You will indicate your closing date on the sales contract, and we would adjust this accordingly. As discussed, we have to start a new escrow account for you. So these two line items are the deposit, an initial deposit into that new escrow account, and then you'll pay into it every month. I would expect you to probably have some initiation fees and everything for the HOA, but I don't try and estimate those because they vary so widely. The per diem interest here is based on your closing date, loan amount, and interest rate, and so that would adjust accordingly. So that's our per diem interest there. And then we do pay your first year of hazard insurance up front at closing. Note that hazard insurance and homeowners insurance are the same thing. We just use those terms interchangeably. Scrolling up here to the top, we see our principal and interest based on the interest rate and loan amount. Our hazard insurance and property taxes, I've just estimated based on the sales price and everything. We would finalize these two items throughout the process. Your mortgage insurance is 1.33% per month. That is based on several factors, including your credit. Your current credit score is 631. So that's why we see that mortgage insurance there. For our payment, we're looking at about $17.64, and then we would expect some sort of association fee. My rule for the association fee is I've pre-approved you with a $250 association fee. If we're getting much above that, I think we want to review, make sure that we're still going to get an approval, because we are getting at the upper end of our debt to income, our allowable debt to income. So if we close in January, we're going to skip February and make our first payment in March. You've had a mortgage before, so I assume you are aware that mortgage insurance is paid in arrears. So when you pay that March payment, you're paying your February mortgage interest. And then we see a breakdown of closing here. Do want to note I have you putting a 1% earnest money deposit. That is credited to you at closing. So if we remove that, you're looking at an all-in of about $24,500. Now, I'm under the impression this is probably the high end of what you're looking at, but that's what we are, I'm estimating right now. Again, there's a few items. You might expect some HOA dues or initiation dues there will be prorated dues, but there may be some initial dues that are due, which could push this above 25,000 or so. So please keep that in mind. Now, coming back to your credit score is, it impacts our rate and it impacts your mortgage insurance. So I have a program that allows me to it's called a what if simulator. You see that up here. And it looks like you have two cards that earlier this year you had some late payments on, some 30-day late payments, and now the card has been, these cards have been closed. We can increase, now it's not a definitive, it's going to go up to 701, but any increase, especially if we can get above 680, it's going to be very helpful for our rate and mortgage insurance. So what we'd like to see is you give these people a call, ask them how you can get those late payments removed and have the status on them show as paid as agreed. This is going to be helpful. It's not a necessity, Gina. We qualified you at the 631, but if we have time, if you've got time to make these phone calls, it can save you some money on the interest rate and then some money on the mortgage insurance probably. So just wanted to put that out there. If you have time, maybe sometime this week, give these guys a call and see what you might be able to work out with them. Otherwise, good luck with your search. I look forward to working with you and have a nice rest of your day. Bye, Gina.